Hello everyone, this is Evan here from the Trade Risk on Thursday, March 9th. We're intraday right now. I threw out a question on StockTwits and Twitter asking if anyone would like some tickers reviewed, and I took the first 6 of you who sent back to me, and we're going to discuss those names in this video. I'm going to try and keep my responses 60 seconds or less in each of those names. This is actually round 2 of the recording. I just recorded it, and somehow my computer did not want to save it, and I lost that recording. So second attempt, let's see if we can get it right this time. And with that, let's get into the charts. First, let me point your attention here to the S&P 500, which saw a little bit of acceleration lower this afternoon. You could see coming back down and challenging, retesting this support down here. It looks like it's trying to hold in there. 5 to 6 days, or actually now it's 6 days down to sideways in the S&P 500 into a jobs number tomorrow. And it's remarkable to say because it's been so long, but for the first time in forever, we are actually seeing signs of oversold action. And again, this is on the very short-term time frames. For the longer-term players, you'd want to disregard that altogether. But in the very near term, we are seeing some signs of oversold action, and that is very interesting heading into a potential catalyst tomorrow. So we'll leave it there on the S&P 500. Let's look at the names that you guys submitted. The first is NVDA. This is one that I've spent some time looking at myself. We're going to start with the weekly time frame. So the story in NVIDIA, of course, in 2016, a monster run higher into even the beginning of 2017, just a tremendous move higher. Here's what's interesting to note, though, on the weekly time frame. We had this move higher, topped out right around 120. We had a pullback off of 120, 3 weeks of sideways consolidation, and then we came back up, retested 120. It failed, so we got a classic sort of double top up there, and then we pulled back off of it. Now, what's interesting here is volume. Take a look at, let's say, the 3-week consolidation and then the retrace or the retest of 120. All happened on some fairly light or slightly below or at average volume. But take a look at the retest and then that pull off of those highs all occurred on heavy volume, above average volume. So that's notable that you're seeing some increased distribution, some increased urgency to get out of that stock on that retrace or on that retest of 120. I know earnings could have been up there as well, but the volume pattern, of course, getting a little more suspect here ever since failing up there at 120. On the daily time frame, here's the way I look at it. I think the bulls still have a fight in them and can still keep this stock up and propped up and moving sideways if it's back above 101. I think that's the key level to get back above. Those would be the lows here from January. And if we can reclaim that, then I think we have a chance to push back up here and dance around in this range. However, if we start to lose this $95 level, which is proving to be support and some important support at this point, then the bearishly aligned 8 and 20 moving average, the momentum here on the daily time frame is certainly likely to continue to unfold to the downside. The downtrend here will likely continue. We have a clear, very glaring open gap back here from late November. We have some pivots to work against in here. So I'd want to be cautious in NVIDIA if we start to lose these recent lows. If we get back above 101, then I'd say we're in certainly a more of a neutral sort of range-bound state. That's the way I would look at things for now. A little suspect of the recent volume pattern. Got to be a little cautious, but that's sort of the landscape there in NVIDIA. Next is Snap. So Snap is is of course Snapchat, the recent IPO, lots of hype around it. It's only been trading now for 6 trading days, so our history here is limited, but here are the important points I'd want to make. The first is $24. I have it marked at $23.70. That's going to be an important reference point. That's effectively where we IPO'd for Snap. That was the coming to market price, and that's an important inflection point that I want to have on my charts because it's going to be a very emotionally charged level. $29, that's the level we ran up to immediately following its earnings on its day one follow through, and then down here at $20.80, that's roughly the lows from yesterday. So if we go down to a 15-minute chart, take a look at the intraday action here, zoom out a bit, you can see $23.70. Those are effectively the lows there from the initial IPO day. There's your 29. You could say we're in a downtrend here on the 15-minute chart. However, you can see some life lifting off of these lows down here. We've yet to see any meaningful follow through below $21. So I'd be paying attention to these 2370, this 2370 level. If we get back above there, then we could get a little pop of momentum, maybe a retest, maybe a move back up to the top end of this range. If we start to lose, 2250, if you're a very short-term active trader, if we start to lose this level, that's where I'd start to tighten up and be cautious. And back below $21, then you clearly have a downtrend in place, and you'd want to avoid Snapchat for at least the near term until that trend starts to continue, begins to reverse. So that's Snapchat. CME is next. CME, if we go to the daily, let's start with the weekly time frame. So beautiful breakout here back in July of 2016. This is basically when the market broke out as a whole. It lifted above a nice almost 2-year long base here, came all the way up to about 108, pulled back, retested the breakout level it held, and then it kind of was off to the races, zoomed higher, and is in pursuit of higher prices. So very much looks very similar to the S&P, although certainly structurally a little cleaner and better in recent months and years. It's not quite at its all-time highs yet. You can see if you go back to 2008, you can see 141. That's where it looks like it's trying to get to. And again, this is a long-term sort of outlook, but from a structural standpoint, looks like it wants to head back up there eventually and get to those highs. Could take 6 months, could take a year, could take longer, but it is certainly in motion. On the daily time frame, if we zoom in a little bit further, you can see it's hanging on, it's doing what it needs to do. It's not a super momentum clean trending stock, but it's getting the job done. It's above the 8 and 20 period, showing some relative strength here. Depending on how tight you want to keep this, I'd imagine it's a longer term hold for you, 120 or so. If it starts to lose this trend line, and again, you can refine this trend line, but if it starts to lose 120 back below these recent sort of lows in here from February, I'd start to tighten up, maybe be a little bit cautious. But again, it all depends on how tightly you want to manage it. If you're looking for a long-term hold, long-term trend following, then you're certainly going to have a wider stop. So CME, I like it. T, kind of similar situation. I look at this as I'm assuming maybe more of a longer term play here. Weekly time frame, let's take a look here. 2016 was the big breakout right at the beginning of the year. We got this strong move higher from about $33, $34 all the way up to 42. Found some resistance, or at least started to pull back, and that looks like it coincides with the 2008 highs. Had a pretty sharp pullback down to 36, and then we're in the process of bouncing off 36 back up to these recent highs. So here's the couple of scenarios that I'd be looking at. The first here with T, I like it. It's bullish trend. That's constructive to see. You clearly have this little bit of a holding pattern. Looks like it's potentially, a little triangle here. Potentially that could turn into a continuation pattern higher. That would be very constructive. You'd want to, of course, try and take out these highs here at 43.50 would be your next kind of target or level that you'd want to see cleared. But this could turn into a continuation pattern, which would certainly bode well for the bullish case. The darker side, the more pessimistic way that this could sort of unravel is if this does turn into some type of trading range. If this fails here to take out these highs of 2016 and it starts to roll over, then perhaps we're in a larger, longer, messier trading range, or maybe it just needs to come back down here and put in a higher low before it can really start to get going. So that's sort of the outlook. I liked T here on a structural standpoint. I think you get some tight pattern you can look at now, but again, I'd want to see these highs taken out to become more optimistic, add to the position, depending on how, certainly on your strategy and how you want to play it. So that's T. Next is XLF. So financials, very much in line with the S&P 500, up about 6.5% on the year. Tremendous strength towards, of course, the election. Great looking weekly volume pattern here. Everything to like. Bullish trend on all time frames. Now, if we go down to the daily chart, you can see momentum starting to weaken just a little bit as we flatten out here on the 8 and 20 period. But there's clearly still bullish trend on virtually all time frames. Note, we still haven't really filled the gap here from last Wednesday's big move higher. So this sector is still holding up, hasn't filled the gap. Saw a big uptick in volume yesterday. So closely tied to, of course, what the Fed is going to do, perhaps a direct influence to whether or not the Fed hikes next week. Clearly, I think the latest odds are showing 90%. So, I mean, it seems like it should all be priced in at this point that a hike is coming. But that aside, from a price action standpoint, dips should still be looked at as opportunity. And you can see we've already now been 4 days off of highs. This could be another rotational candidate that can continue its uptrend. So I like it. You mentioned, I believe this was David that asked this question. So thanks, Dave, for the question. And you mentioned DB is maybe a specific name that could be interesting here. And yeah, I tend to agree. If we go to the weekly time frame, this one really had this capitulative bottom here in earlier 2016. This is September. We saw a huge volume reversal day here, ran all the way up to $20, almost a double for the stock, and then it's pulled off just a little bit off of these highs. Now you can see we have seen an uptick in volume recently. If we go to the daily time frame, take a look at the sell volume that has come off this stock as it failed at this $20.60 level. That's a little bit concerning. That would have my attention, at least in the short term. The way I look at it, and this is not a precisely drawn trend line here or horizontal level, but this $19.10 level, that's generally what I'd be looking for. If we can reclaim back above there, that would get me a lot more constructive, optimistic, maybe get an initial position as we start to move along sideways, and you can add back above $21, but that would get you back into the long side in DB here. So that's what I'd be paying attention to. The longer we stay below 1910, then we do have some risk to continue to pull back higher, especially with that uptick in volume that we saw. But I still generally like it from a longer term structural play. Just want to be a little bit cautious in the near term. I'd like to see it reclaim that 1910, and then I'd start to be a lot more encouraged about it. So that is the full wrap up. Those are all the 6 names. Thanks everyone so much for submitting those, and I hope you have a great rest of the day and week trading, and hopefully this video gets published this time around. So thanks again. Talk to you again soon.